Mr. Joshipura joining us this morning. Mr. Joshipura, if we could actually begin with, details on the deferred tax gain in the first quarter. Even adjusting for that, it's been a fairly steady quarter. Talk to us about the factors that have driven growth this time.
Actually, as you're aware, the last 4 quarters or so has seen a significant positive change in terms of the policy directions and initiatives that have happened especially in India on the bioenergy space, and we are also seeing that traction in some parts of the other countries in the world. And both of these put together have actually meant that we were entering the quarter in a healthy state of affairs as we finished our last year. On the other hand, we also saw electoral process undergoing in our country in the first quarter, so that did slow down the activities a little bit, but we are expecting that will pick back again. Coming to your questions around the deferred tax credit, so we have a subsidiary which had a different order book build because that serves a very different segment, and their order book build was such that many contracts are slated for execution in the second half of the year, and therefore we didn't have too much to execute in first half. That led to their reporting losses, and therefore in this particular quarter it looks like that the standalone company's profit have actually been hampered by the subsidiary's profit, but that to my mind is a temporary quarterly situation.
And how have the ethanol operations shaped up? What's the outlook on orders on that front?
As I mentioned, the ethanol policy has been very, very positive, and we continue to see positive development in that area. India has now gone to something like 6.2% of ethanol blend as I speak with you, and that means something like 200 crore liters of ethanol is now being blended. The plan of the government is to go to 10% overall at a country level, and that means that another almost equal quantity of ethanol capacity has to be created. So there's a clear market demand that is emerging. There's a positive policy environment. We are well placed because of our very strong technology position and track record. So it's in all, it's a very positive development going forward.
Now, you have around 70% market share in the domestic ethanol plant installed capacity. What is your current capacity utilization and what exactly are you targeting?
So we are not capacity constrained in that sense because we have a very flexible model for serving our customers' contracts. So we are absolutely okay as far as serving the emerging demand from the market is concerned. So no problem at all on that front. We are happy to meet even and double this load without batting an eyelid.
Okay. And now your consolidated order backlog as of June 30th stood at about 886 crores. Can you tell us what is your order book visibility? What are some of the recent orders that you've bagged?
So, as you said, the number is 886 crores, and that is the contracts that we will go forward and execute as we progress during the year. Given our project cycles, typically these are between 10 to 12 months, so we would expect that almost entire order book of this 886 crore will get executed during the year.
Right. You've also built a strong position in the breweries industry with around 65% market share. How is it that you see the business growing?
So breweries also have seen a very strong growth last year. That's a business that does not have a quarterly cycle, but it's more like a 2-year cycle. So we expect that this will continue to build itself strong. Last year, India saw a lot of capacity being built, but then elections were a bit of a temper because there are different laws that come into play on how much of production can happen. But as we see now, again, it is rolling back to normal times, and we expect it to be growing very, very healthy.
Right. You also signed a construction license agreement with a US-based company, that's Jevo, to offer technology for production of high-energy renewable aviation jet fuels. Tell us a little bit more about that. It sounds very interesting, and whether or not there are other tie-ups as such on the anvil.
So we have a zero debt position for the company that has been continuing for some time. And currently we have 307 crores of cash and cash equivalents on our books.
Okay, you've also signed a construction license agreement with US-based Gevo to offer technology for, production of high-energy renewable aviation jet fuel. Tell us about that and some of the other tie-ups that you're looking at.
So the Gevo agreement actually allows us to build a plant based on sugar molasses based route for production of isobutanol, and that in turn leads to biojet fuel. So that is the agreement that we signed with the Gevo. Has the technology for conversion of the molasses sugars to isobutanol, and the process is engineered by us, piloted by us, and now we have an agreement with them that which essentially means that anywhere in the world where a Gevo technology license is used for this particular route, then we will be the partners of choice for building that plant.
All right, Mr. Joshipura, thanks for joining us this morning. Good chatting with you.